All right, welcome to the daily market recap for Thursday, September 18th. In this video, we'll be taking a look at the action today of the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups like we do with every daily recap. So if you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Getting into the indexes, NASDAQ, awesome day overall in the market today. NASDAQ finished up 0.9% after a big gap up. We had a really strong push in the middle part of the day, but about the last 2 hours, we saw some profit taking, which in my mind is completely healthy. After basically going straight up from September 2nd, some profit taking here would be awesome. Maybe a pull into the 5 day, even the 10 day would still be healthy overall. But it does seem like we're in that acceleration period of the uptrend. And usually the other side of the acceleration is also acceleration in the downside. So just be careful about putting on a bunch of new exposure while the indexes are extended like this. The S&P 500 up 0.5% on the day, similar kind of daily closing range, basically halfway. Two gap zones and the 10-day moving average. Pull back to that should be a nice support area. If we drop through that, then it might be time for a longer correction. Next, we have the growth stocks, the Russell 2000. And speaking of the Russell 2000, let's check out that chart. IWM, a new all-time high, not a bearish thing when the smaller stocks in the market are acting this well. The IWO is the growth stocks of that Russell 2000. Also, similar strength today with a gap up and open right near the low of the day, closed near the high of the day. It made a new yearly high, but there's still some price action back in February of 2021 that we have a little bit of ways to go to clear that. Hopefully, we do so shortly. Next, we have ARKK, which continues its breakout of this like 5 or 6 week base, letting that 10-week moving average catch up, the 50-day moving average. Another gap up, open near the low, closed near the high of the day. Great extension here, not doing anything wrong. Next, we have IBIT, a way to track Bitcoin, higher highs, higher lows. I know it shows this as a gap up on here. Bitcoin trades 24/7, so no real gaps. But overall, just incredible action off the lows here. It really looked scary after the false breakout got sold off into, but after pulling back into like the breakout retest down here, it's been only strength for Bitcoin, which is a good sign for risk on stocks as well. Next, let's take a look at the liquid leaders. We'll sort that by price percent change. And OKLO, which is nice for me, up 10% today. A nice gap up, rallied. I did trim a third of this as we're getting extended in the short term. So I've got one third of my position left, but continues to act really well. A little bit of weakness at the end of the day, but I mean, from 72 to 110, a little bit of profit taking, completely healthy. We'll see how a pullback to the 5 day moving average gets treated. Next, we have CRDO gapped out of this little 5, 6 day consolidation at new all-time highs, up 4.8% today. APP, another gap up, another all-time high close, up 2.5%. CLS continues to consolidate, allowing the 10-day moving average to catch up, which is a healthy action overall after a big gap up on September 5th. That was up 9.6%. More sideways action, letting that 10-day like curl up under some higher lows would be solid price action. Otherwise, breakthrough today's high is potentially viable there. BE, if it's a day that ends in Y, BE is going to be up on the day, up another 1.6%. Is getting extended in the short term. We have a doji candle here, so indecision candle. That just means that we could continue to rally higher or start to break lower. Really, you want to look for the follow through before making a decision on the continued trend or reversal. Next, we have Reddit, a little bit of ugly action after a gap up, big rally, closed near the low of the day, still up 1.6%. And until we follow through to the downside, that's just short-term profit taking. The 10-day moving average and support gap around 256 is the spot that I'd be watching. Google consolidating over the 5 day moving average, not doing anything wrong there. ALAB, higher highs, higher lows, maybe just a little extended in the short term. More consolidation, pull back to the 10-day, the gap zone at 230 would be fine. Even like if this pulls back into the 20-day, into the 215 range in the gap zone. I think the overall uptrend is still there. Then Alibaba finally had a red day after getting pretty extended in the short term, still over the 5-day moving average, and did so on way lighter volume. So to me, that's just a consolidation candle. And I wouldn't be surprised if we continue to rip higher on Friday, just given how little volume came out in the 2% pullback after the price action that we've just seen. Next, we'll jump to some industry ETFs. The main one today to talk about semiconductors, SMH, up 2 point, no, not 2.8, sorry, up 3.9%, closing still pretty high in the daily range, higher than the indexes, so some good relative strength there. The only thing that kind of concerns me with this move is this is the most volume that we've seen since the lows. You see a lot of volume at lows as people panic, and then you see a lot of volume at highs as people FOMO in. So I drew this line across the close, and to me, good above the line, bad below. At this point, with the indexes pretty extended, I am a little nervous to press my luck on any new positions. So we'll keep an eye on semiconductors to see if this is like a blow off top move. It doesn't have that overwhelming type of volume yet, so I would not think that's like the top right there. But we'll see how price action responds over the next couple days here. Definitely a little extended in the short term, lots of volume, but the number of semiconductor stocks that are ripping higher is truly impressive. NLR, nuclear and uranium ETF, great action today. Higher highs, higher lows, starts to eat into that resistance gap. Uh, every close has been over the 5-day moving average, which is another bonus. Cybersecurity breaking into new all-time highs now that CrowdStrike seems to be showing some strength. CrowdStrike, you can see I haven't really looked at this chart in a while because it's been under the 50-day. Big move up today, up, what was it, 12.9%. That's going to help out cybersecurity, push it into new all-time highs. Robotics, new highs. Software, new all-time highs. Blockchain, new all-time highs. Defense and aerospace, new all-time highs. Internet ETF, new all-time highs. Financials, new all-time highs. Um, Cannabis ETF, I did start a position today through this pivot. I got in a little bit late, 447. But I really like how we had two waves down here. We had the 200-day that's just going flat. So after a move from $2 up to $6, a more aggressive pullback like it isn't the end of the trend in my mind. There's just overhead supply. It got extended in the short term. People were taking profits. Now we've had the little flush, our first gap up yesterday or 2 days ago, tight day of consolidation. So through that pivot was the buy point. Any pullback into that area might be an ad spot to play versus yesterday's low for me. But I really think this is about ready to get going again. Biotech ETF, new high for the year, but not 52-week highs. This was awesome price action. My largest position right now is in LABU, so nice day there. XME, new closing highs are right at it. Very strong action. And I think that kind of ends it for the new all-time highs. But as you can see, this is not a narrow market right now. Almost every group is participating, making new all-time highs. Even the stocks that are kind of like down towards the end of this list have been leading lately. Solar stocks have been one of the leading groups in the market. XLE bounced off the 10-day, strong close over the 5-day. This looks like a quality base, just getting ready to go. KWeb made new 52-week highs yesterday, coming out of 3.5-year base. Extremely, extremely bullish action all the way across the market. And the best thing, I should have had this queued up. NAAIM Active Investor Exposure Index came out today. So this takes the positioning as of Tuesday's close, or sorry, as of Wednesday's close for any active investors. And positioning dropped. The indexes are at all-time highs. The growth stocks are ripping higher. Speculative stocks are ripping higher. And positioning hasn't even caught up yet. So usually I'm looking at this over 95%. I start to get a little bit nervous. Usually pivots don't work as well. Things get extended. You see a lot of the volatility. Um, and we kind of got that when we were at 96 back in August. We saw a lot of volatility in August. It wasn't until the tail end of August where things started to really work and the market got um, market got pretty easy. And now we're seeing positioning drop. And the only thing that I can think of is they didn't want to have like positioning before the FOMC meeting, but this is as of the close for the FOMC day. So pretty shocking stuff that exposure is dropping while everything else is ripping. That does create the potential for a true like blow off top in the market where eventually everyone FOMOs in, they capitulate, they can't handle just stocks ripping, and we get a massive move up. And unfortunately, that usually tops the market for a while. But the last couple days of that type of acceleration move is very, very profitable. So until we really see like the NASDAQ lose the 5 day moving average on volume or even the 10 day with ARKK over the 5 day, IWO over the 5 day, sorry, I flipped those, um, and Bitcoin and crypto stocks working well, like until you see momentum break down, I would be careful shorting anything. And as long as you shrink your time frame and look for more kind of performance boosting trades, the momentum is still to the upside. So getting into some long setups, we'll go most liquid at the top, least liquid at the bottom. First is Robinhood. Nice gap up today, made new all-time highs, but kind of closed a little bit weaker. For this, I'm just looking for a pullback into the HVC at 117-ish area. That should also align with the 10-day moving average. Maybe not tomorrow, but if that happened on Monday. So I've got alerts at the end of this gap zone at 5 day moving average, and then another one at the HVC to watch for that pullback. OPEN, this is a true test of momentum for the market. It's been kind of the, I guess, momentum leader from 52 cents up to $10, now forming a quality high tight flag over the 5 day moving average. Today, very, very little volume, tight close with some air to the 5 day, just below all time highs. We're in a momentum market. As long as you shrink your time frame and stay on the side of the daily VWAP, open is probably one of the top top opportunities tomorrow. Just from this kind of tightness with a momentum name like this in a market that we're in, with positioning still light, it's going to be one of my main focuses tomorrow. NBIS, I tried this today and then booked it for a couple dollar gain because I didn't want to hold anything without like a profit cushion overnight, but it's really not doing anything wrong. Got going over the HVC, closed kind of mid-range. Would just be looking for another break over that like $95 area as potential entry, stop at today's low, and hopefully it can get and close over the HVC tomorrow. TEM, this was a super like frustrating stock to trade. Still, kind of shakes out to the 10 day moving average often. Today, really tight close on very little volume, right at all time highs. Going into a Friday, you can see some momentum in this name. So it would just be a breakout through today's high, stop at today's low, and the 5 day moving average. I don't want to be arguing with price. Like if this breaks out and then reverses where the market's where it's at, with the market where it's at right now, I don't want to be holding any losers for any amount of time. FSLR for solar, this was on the watch list today. If we could pull back into the pivot, we did exactly that and then bounced well. Another pullback into that area, into that 207.50 spot, maybe with a market pullback, would be a spot to watch versus the 10 day moving average. NET, good shakeout yesterday, gap and go today. Now, probably not a setup for tomorrow, but over the next couple days, watch for a pullback into that 20-day EMA and the gap zone low. AAOI, with the 200-day still sloping down, I expect more volatility in a name like this. And when you expect more volatility, I like to buy more on shakeouts. So I'll be watching for a pullback all the way to the bottom of the support gap under the 10-day moving average as a potential higher low as this like builds out a base. If the market were to pull in a normal fashion, like over the next 5 or 6 days, and not accelerate into that blow off top, then I think this is going to be one of like the better setups in the market because it's a high ADR, it's not extended. Another higher low in this would set it up very similar to Tesla before the breakout. So I don't want to be buying this extended because we have resistance gaps here. We have a 200-day that's sloping down, but a pullback into the 10-day moving average, if the market kind of responds normally, is going to be a key spot for me. Next, we have some kind of performance booster stocks. OPAD. This does trade $118 million a day. So liquid enough over the last 20 days. Big move up from like $1 to $6. Nice flag in here. These are the types of markets that this setup would work with. We had a very tight, low volume red candle day under the 5 and the 10-day moving average, just a break over today's high versus today's low. Again, we're in a momentum market. These are the types of setups that can really squeeze towards the end of that move. MGNI, nice move from $8 up to about 25. Made new highs after that. Pulled into the 50-day moving average. This setup reminds me of OKLO because we have a big shakeout under the 50-day. We reclaim it the next day, and then we get nice and tight on low volume. So just to push through those highs at $24 is viable. Stop would be today's low, and you would get it under the 50-day moving average. Next, we have SYM. This one's just been churning into that rising 50-day moving average, which is kind of a funky chart to look at, but I've noticed more and more that like as long as the 50 days rising or just flattening out and prices sticking around that area, you can get some pretty quality moves off that, off any momentum breaks there. One thing I'm watching for here, we did uppercut and fail at the like resistance gap sliver. I wouldn't even call it a gap zone today. But the 20-day moving average and gap zone just under $50. So we would undercut like two key moving averages, a gap zone and a round number. Undercut that, reclaim the the low of that gap zone, and then the stop would be at yesterday's low. Next, we have PARR. This is in oil and gas. We talked about XLE being a potential like base breakout. This is one of the stocks in that group. Really quality action, little cup and handle, really tight price action over the 5-day moving average. Just looking for a break over the highs here at $36. Stop would be the 10-day moving average. SLDP, this is definitely a performance boosting type play from 72 cents up to 566. Pulled back under the 50-day moving average, so that probably shook out a lot of people that bought late in this trend. Then wedged up into all the moving averages, nice tight consolidation. You play this on the long side or the short side. Great kind of gauge for momentum if we're going to keep it in the market or if we're kind of topping out of the momentum. This breaks to the downside. There's one signal that momentum is slowing down a bit. If it breaks to the upside, like I kind of expect it to, we're in a momentum market and that continues. And finally, we have UMAC. This does trade only $26 million a day, so you have to size it appropriately. But another name, kind of like IONQ's base, not as perfect as RGTI's, but you have that big move back in November of last year, November, December, a full year of basing. We have the 200-day catching up, just tested that recently. Lower volume day today, closed right at the 5-day moving average. This, I would just be looking for a gap up opening range break to play versus today's low. Then finally, we have 9 short setups to cover. The first is BE. I would love this if it has one more gap and go day like we got yesterday, like a big candle, and ideally on the highest volume ever. If you take a look back at MSTR's parabolic short, it had the highest volume ever like 2 or 3 days back to back. We're getting elevated volume as this goes parabolic, but we haven't gotten the just like enormous volume where people capitulate and buy it right at the top. So ideally, we get one more day like that, like yesterday, tomorrow, and then on Monday, we can look for a parabolic short. Another way to play this is if we get a gap down tomorrow, opening range break would be the short, stop would be like the closing price. I wouldn't want to hold it on a red to green move. Next, we have Carvana. This stock definitely one to study. I mean, went from 350 down to 380. Sorry, $350 down to $3.80. Back all the way up to $400. So definitely has made a massive move already. We uppercut and failed at the resistance gap at the HVC today, while momentum was pretty strong in the market. Closed basically flat on the day. What I would be looking for is a lower high rally into this area, like at 390, an uppercut and fail of the resistance gap, and then I could play my stop at today's high. Next, we have Rocket Lab. We already saw ASTS start to break down. Rocket Lab did an offering, which a lot of stocks have been doing offerings lately, and they've been getting bought up and rallying higher. Not the case for Rocket Lab, down 12.5%. We had a tight day yesterday, gap up, open on the high, close on the low today. And another stock that's made a massive move already from $3 up to $47 the last 2 years. So we'd be looking for a breakthrough today's low as the entry, stop at today's high. Next, we have ZEPP. Um, Continues to be kind of long or short setup, whatever you want to play it. Lots of consolidation into the 20-day moving average. First time it's testing the 20-day in the entire uptrend, which is usually a bullish spot. Um, but the market's been super strong lately. We've had momentum stocks ripping higher, and this hasn't been participating over the last 2 weeks. So that makes me a little bit cautious. We also have two resistance gaps or two gap down zones. Um, Still would not want to short this on strength because after this type of consolidation in the market that we're in, maybe it just reignites here and we have another 3 or 4 days back to back like we had. I want to take this on weakness, a loss of today's low, the 20-day moving average, $45 as the entry, and then the stop would be today's closing price. DFDV continues to just like rally into this resistance gap, the 50-day moving average, rejected at it today and closed lower while we were in a momentum market. So a move under today's low is the short. Stop would be the 50-day moving average on that one. NEGG, one that we've been talking about the last couple of days, could be a long or short setup. I can see it both ways because we've had a big move down after a massive move up. Put in two higher lows, got nice and tight under the 20-day moving average and the resistance gap that we uppercut and failed at today. So a break back through that zone and through $50 could really ignite this move back higher, or a break under today's low would be potentially a bear flag breakdown. And just like SLDP, you don't have to trade this, but set alerts on both sides, and then you get some market feedback on whether momentum is remaining in the market or if it's starting to get sucked away. Next, we have MSTR. Today, awesome price action out of MSTR, Coinbase, crypto in general. Today it was up 5.9%. It was up like 7 or 8% at one point in the day. Rallied up through the resistance gap, the 200-day moving average, uppercut and failed exactly at the resistance gap high. So we do have sellers, like that's verified sellers in that area. Um, it would be a spot that I would want to try in a couple days just because it just seems like crypto is starting to emerge as the next group that's getting rotation or getting money rotated into it. I'm a little nervous trying to short this name at the very beginning of that rotation. So if we see like a couple days of relative weakness while crypto pumps higher, and then we eventually get another rally up over the 200-day moving average, that then would be a spot that I would want to play it at. But I'd be a little cautious until then, just because if the market just continues to like pump, they're going to look for another group to rotate to. Crypto really felt like that was the group today, and usually the rotation lasts more than a couple days. Next, we have SEZL. Big gap down on earnings, 34%. Just sideways action, very weak price action overall. Drop through today's low would be the entry. Stop would be like $91 over these like 3 or 4 daily highs. And then finally, CAR, Avis Budget Group, big gap down on earnings, just sideways action for multiple weeks. Break through today's low, entry, stop at today's high. And that is going to be the daily market recap for what is it, Thursday, September 18th. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great night, and I'll see you guys in Saturday's video.